Wednesday night, and thank you for joining us tonight on the Newsfeed Late Night. I am Thabo Mduli. South Africa's economy contracted by 7% in 2020. Experts have highlighted that the country was already in a recession well before the COVID-19 outbreak. But the pandemic has shoved the country deeper into troubled waters. With the country's debt to GDP sitting above 80%, how do we carve a path to sustainable economic recovery and minimize the country's debt before it's too late? Joining me now to talk about this is Senior Research Fellow and Political Economist at Trade Collective, Lebohang Pheko, as well as Founding Director of the Center for Economic Development and Transformation, Duma Gqubule, and COSATU's Parliamentary Coordinator, Matthew Parks. To join in the conversation, you can tag us tonight at Newsroom 405 or WhatsApp us your questions and comments to 072 110 5584. We'll get into those comments in a moment. Good evening, Lebohang, Braduma, and Matthew. Thank you very much for joining us tonight.
Thanks, Thabo.
Thanks, Thabo.
All right, I'm gathering you can all hear me, so I'm going to start with you, Duma. Most nations in the world have followed a risky trajectory if you look at the levels of indebtedness after the 2008 financial crisis. Why do we make such a big deal about the indebtedness of South Africa? I mean, do we have a debt crisis or a debt challenge, or are we really looking at having a growth challenge?
Thank you, Thabo. I don't think we have a GDP. We don't have a debt crisis. We have a GDP growth crisis. Now, let me just say that today, what we saw in Braamfontein was horrific. It was a watershed moment in our country's post-apartheid history, where the government, this debt will go down as the first death due to austerity, and the irrational policies that government has put in place to allegedly solve this debt problem. What we saw in the budget a couple of weeks ago was the finance minister said it is not an austerity budget. I've read every page of that 250-page budget review. Every single page talks about fiscal consolidation and austerity. So what we saw in Braamfontein today is the fruit of those policies, because the government has stopped funding NSFAS and they cut the funding to NSFAS. They're not going to fund people to learn to be Bachelor of Nursing degrees, Bachelor of Education degrees, BTech degrees, and on the other side, they've cut funding towards higher education subsidies by 8 billion rand over the next 3 years. So I just want to say, I just want to say that we should revive the campaign for free tertiary education for all South Africans, including the children of the ones who earn more than 350,000 rand a month. Now, in terms of the debt crisis, we had a once-in-a-century pandemic, as you saw from the GDP.
All right, there seems to be some challenge there, but Duma, I'll come back to you, and I want to hear your thoughts on that. Indeed, we've had one of the worst pandemics in the last 100 years, at least, that we've had to deal with. But these problems date a little bit way before that. Aslebu, they are saying, of course, 21% of our government expenditure goes to debt servicing costs. And when they bring out that number, a lot of people become quite nervous to say, whoa, we are spending quite a lot on debt. Are we really?
Yeah, I think we are actually. And the thing with this is that it actually illustrates that we are pursuing the wrong kinds of economic growth. So even our growth model is outwardly looking, it's export driven, it is commodities driven, and commodities on any good day, and this is not any good day, fluctuate. You know, they're given to the vagaries of international markets, and read that as European, US markets primarily. We don't set the cost of our own commodities, gold, diamonds, silver, and so on, or platinum, which is quite bizarre. And I think the other thing, as you rightly said in your introduction, is that this isn't new. I mean, what we're seeing is a pandemic among pandemics. So it's really a pandemic of austerity. It's a continuing pandemic of states which have been truncated and state functions which have been truncated. It's a pandemic of a disinvestment, many decades, years and decades of disinvestment in public health, in public education, in social infrastructure. And I also see this really as an essential definitional moment for us to rethink what our priorities are in relation to to social development and economic development and the conflation between the two, but also how we then characterize growth. I mean, I think GDP as a measure of growth is extremely unsatisfactory because all it does is to measure the growth in a few sectors. It doesn't really measure the important things. It doesn't measure the growth in social spending, in healthcare, in education. It doesn't measure the outcome and well-being and people's life outlook and outcomes, social outcomes. And I mean, I think as Duma said, we saw that today. This is really this really is the boiling point and the bursting point of all of this. And we keep doing the same things all over again. So one would think that states and countries would have learned after 2008 that this overwhelming financialization of markets and this notion that markets are sovereign would have lost its currency, but instead it's been incredibly resilient and stubbornly so. And unfortunately, what I see is post-COVID, whatever post-COVID is, we're getting caught up in this dogma of building back better, which basically means building back the same garbage which has failed us, and new forms of austerity, new forms of structural adjustment, and so forth.
Now, according to the IMF, Matthew, in terms of the percentage of world debt, South Africa actually doesn't even begin to make the top 5. I mean, you've got the US at 31%, then you've got Japan, China, Italy, and France. South Africa is only ranked at number 33 in terms of the world as far as government debt is concerned. Why do we make such a big deal out of it to say, well, look, our borrowing levels are quite high and we need to then implement some austerity measures and exercise fiscal discipline?
Yeah. Look, I mean, I think, to be honest, we're facing a confluence of many storms at once. I think to answer your question, why do people make an issue about the debt level? Is, well, government is in a crisis. We are in a fiscal crisis. But I think from Cosato's point of view, and I think similar to what Duma was saying, we think government is getting it wrong. Our fundamental crisis is that we have a stagnant economy, that unemployment is pushed well past 40%. Many workers are facing retrenchment. Many companies are closing. That's the fundamental crisis. If you can grow the economy, you can save jobs, you can create businesses, workers can buy the goods you produce, companies can pay the company tax the state needs to survive on, to deliver services, etc. But simply imposing an austerity budget or a freeze on expenditure across departments in real terms after inflation, a cut on the back of a public service wage freeze for 4 years, that's not going to address the issues. The real reason why the state is in a fiscal crisis is because we allow 10% of our budget every year to be stolen, to be lost to wasteful expenditure, etc. That's 150 billion rand that we've allowed our state-owned enterprises to be run into the ground by mismanagement, by corruption, by incompetence, by structural changes in the sectors. We've allowed billions of rands to be lost to tax collection because of tax fraud, customs evasion, and so forth. Those are the fundamental crises. So by simply imposing an austerity budget and by dumping the bill for looting and mismanagement in a stagnant economy upon nurses and teachers and doctors and police officers, we're not going to resolve the issue. In fact, we're going to make it worse because we're going to choke the economy when it needs most to be stimulated. We're going to weaken public services. In fact, we're going to spark a brain drain of skilled workers from the public service. You're going to find nurses and doctors being poached by wealthy countries in the Middle East and Canada. Yeah. You're going to find teachers moving to private schools, etc. So we're not making it right. You need to grow the economy so people can pay the taxes for government to pay down the debt. Yeah. We don't want to see government going the Greece route where the state collapsed because of a burgeoning debt crisis. But the way to resolve it is to grow the economy, not to choke it, not to throw workers under the bus.
But are you saying, man, the only way to dig us out at this particular point would be to get more debt?
No, it's to grow the economy. And to grow the economy doesn't mean you have to create debt. It means you address the structural blockages like selling digital spectrum, like dealing with water licenses. It means you fix ESCOM so the economy, so industries, so mining industries have reliable and affordable electricity. But also it's about investing in infrastructure and doing it quickly. But also, we can do all these things, but if the state doesn't get its act together, if you don't address the fundamental bleeding of the state because of corruption, wasteful expenditure, then everything else we're doing is moving ships on the Titanic. Government has to get its house in order because we can't afford to tax away out of the economy. We can't afford to choke workers, to choke economic growth. You have to fix the state, That will release the resources required to grow the economy. But equally, the banks, the investment funds, they also have to come to the party, because the state on its own will never have enough funds to grow the economy. They have to come to the party. They have to also show solidarity to other employers and businesses and to look at alternatives to retrenchment. So it's a complex issue. It's hard work. But what government is doing is simply to outsource the bill to public servants and to choke the economy. That's a lazy, short-sighted route to deal with much more complicated issues.
Yeah. So how does then, okay, let me take a break. When we come back, we'll get to those issues, Matthew, in just a moment. The question of how do we then get the money that is required for that infrastructure? Because raising taxes on the affluent individuals or corporations doesn't seem like is the route that the government is going to take. And 8 months ago, they're talking about possibly getting 40 billion rands from the consumers via tax, but they seem to have not continued with that route. So what are the options then? Is it to find new revenue at this particular point? We'll continue with this conversation. Lebohang Pheko, as well Duma Gqubule and Matthew Parks joining us tonight. You can tag us on Twitter at You're back with us on the Newsfeed Late Night. Thanks for staying on the conversation around the debt challenge tonight. Lebohang Pheko, Duma Gqubule, as well as Matthew Parks with us. This, of course, follows the Stats South Africa releasing those numbers, the GDP contracting by 7% in the year 2020. Others saying, well, it's better than what was initially predicted by economists, which is a signal of some sort of a recovery. We'd like to get your views on Twitter, Newsroom405, on WhatsApp, 072-110-5584. So, Duma, we were talking earlier on. I mean, if you look at where we were sitting in 2009 during before the initial financial crisis, 26% debt to GDP. Now we are talking 80% debt to GDP. How much debt is too much debt? And at what point do we say now it is beginning to have an impact on our growth?
Okay, first thing I have to say is that our debt is not high by international standards. During this pandemic, countries throughout the world spent $14 trillion stimulating their economies through fiscal packages, and the debt to GDP ratio for the world increased by about 15 percentage points to 100% of GDP. Now in South Africa, we had exactly the same thing, and people must understand the increase of the debt ratio has got nothing to do with overspending. It's to do with the collapse of the economy during this once-in-a-century pandemic. So what I would say is that structural reforms, every single research that has been done anywhere in the world by National Treasury, by IMF, by everybody, has not delivered growth in the short term. So I believe that they actually have a cost in the short term. So they should be off the table. What we need to talk about right now is the only solution out of this crisis in the short term is to spend our way out of this crisis. There are a number of options, Thabo. Number one, we have a central bank. I was looking at the budget review. The loans from the IMF has got a 3-year payment term. The new development bank loan has got a payment holiday of 5 years. I'm asking, is there any reason why the central bank can't provide financing to government? Number one, at no cost. Number two, on favorable terms with a payment holiday until the economy recovers. Number three, we have a public investment corporation which made surpluses of 416 billion rands since 2013. And we've got this insane level of funding in the public investment corporation. The PIC has got 700 billion rands of state debt. They can provide more debt to the country on favorable terms. I believe we can restructure that whole PIC. We can reduce the funding to 50%, and there would still be 15 billion. They've been having surpluses of about 50 billion rands a year, which are totally unnecessary. So if we reduce the funding by 50 billion rands in the PIC, there would still be a surplus of 15 billion rands a year. And we could be able to write off state debt of 700 billion rands, and we could also push 300 billion rands into the economy. We also have 800 billion rands of foreign exchange reserves. That is way in excess of what we need to finance our imports. I believe we can release about half of our foreign exchange reserves into the economy. So what I'm trying to say is that there is no financial constraint in terms of having a fiscal stimulus. There are institutional constraints that Matt is talking about relating to state capacity and corruption and so forth, but there is no financial constraint. So the government must put an end to this irrational austerity policies, because when a national budget doesn't operate like a household. In a national budget, when you cut spending, you reduce your GDP and your debt to GDP ratio goes up. So what the policies, the irrational policies of the government are going to result in a worse debt crisis. But if we spend more on the economy and grow the economy, then our debt to GDP ratio will go down. And the last thing I want to say is that during the last period between 2004 and 2008, when our economy was growing very fast, we could easily afford the employment of 200,000 public servants and generous increases to public servants. It didn't increase as a percentage of GDP, and our debt went down at the same time as we were. So we should focus on growing this economy so that we can employ more public. We need more teachers. We need more nurses. We don't need to be cutting those people. Yeah. So that is what I think we should be doing.
So are you disputing the fact that how we got here? I mean, others are suggesting that after the economic meltdown of 2008, government was spending more than it was getting, and we were consistently running a deficit because we were paying, for example, too much higher rates in wages when compared to the private sector, and we were actually heavy as far as the hiring that we were doing at the time.
Okay, let me explain what happened. Okay, between 2010 and 2013, we had a recovery in our economy, a short one, of about 2.8% growth, just under 3% growth in our economy. And so Treasury has a graph where they show that there were tax revenue shortfall. Tax revenue was more than what they expected. So there were no shortfalls in tax revenue. But when the austerity started between 2014 and 2019, there were tax revenue shortfalls of 2,000. So the government spending went down to about 1% a year in terms of the growth of government spending. So the austerity policies that we had since 2014, they are the cause of this debt crisis, because if we hadn't had those austerity policies and we'd focused on growing the economy since 2014, we wouldn't have had a problem in terms of paying our public servants, in terms of recapitalizing our state-owned enterprises, which need recapitalization, and in investing in infrastructure. And I just have to say that, so I've done a very careful analysis of this debt over the last 12 years, and I can tell you one thing: it is not because of the public sector wage bill. According to my research, the public sector wage bill contributed 7% to the increase in debt. So let us talk about facts, and let's not talk about ideology and dogma that the Treasury is talking about.
Aslebo, what's your take on that? Structural reforms, let's put that off the table. Let's spend more. Let's go to the PIC. Let them give us a couple of more money. The Reserve Bank, let them borrow to government a little bit more. Let us spend into this economy.
Sorry. So basically, I mean, there's a few things. There's certainly a school of thought that suggests that our Reserve Bank could be a bit more interventionist than it has been. It's taken this very austere, very genteel approach over, and there's this stubbornness around shifting or expanding the Reserve Bank mandate, which I don't think is per se. I don't quite see the logic for that, particularly because there are a lot of resources that can be released within the Reserve Bank. The Reserve Bank has also got the capacity to ensure that particular industries, those which are more labor absorbent, that absorb women, that absorb particular skills, especially the skills that we want to grow in this country, that those are supported. And we've seen this. I mean, countries like, I think, China, Japan and Vietnam have managed to put money into key economic sectors to ensure that even during the corona crisis, these were cushioned to give them a level of resilience, which will enable them to hum along. I don't know for how long, if this continues for the next year or 2 or 3 or 4, but to hum along in the short term and to ensure that jobs are not lost. The other thing, part of that, is that we certainly could do with a much more activist industrial policy. So basically, this means then backing particular industries and the ones where we see that there is the potential for growth to be maintained. Agriculture, for some reason, is a much neglected sector in our country, and we've seen over the last year in particular that, if nothing else, we didn't stop eating, and that there's opportunity here to increase our local and regional value chains within South Africa and across the African continent. And this would, of course, ameliorate the costs of importing basic commodities and basic food commodities from across the world, our carbon footprint, and as well as, of course, just the whole legalities and the difficulties of cross-border travel at the moment. Linked to that, of course, and it might be a very unpopular very unpopular, particularly for the middle classes. However, I would like to strongly suggest that we look into different sorts of taxes, especially carbon taxes, green taxes, and much greater corporate taxes. Corporate taxes literally get away for free in this country and in countries across the world. And these tax holidays, and this is to do with this sort of very market orthodox, slightly neoliberal approach to business, which suggests that foreign direct investment is the only way to build an economy. And I don't think that
let's unpack that a little bit more, Aslebu. I mean, why borrowing money is seemingly more attractive to government than actually raising taxes for the more affluent individuals or even corporations, and maybe also looking at the middle class?
It's more popular because it's less, well, it's easier for the government because people don't want to cheese off what they feel is their strongest support base. It's also because it's felt as though the middle class are the people who bolster the economy. There's this false myth. It's to do with poverty shaming as well. There's this mythology that only a few people in this country are actually the ones who pay taxes. And it's a complete fallacy. Everybody pays taxes. Every time that you go and buy bread, you're paying a tax of some sort. You're paying VAT on most products. Every time you put petrol in your car, you're paying some sort of a tax. So it's this kind of poverty shaming, the shaming of the working poor, and this suggestion that there's only a few people, usually the white middle class, and let's be quite frank about this, who are the ones who are subsidizing for these lazy black people, and it's just not true. And I think that it's really a populist approach to tax efficacy rather than a pragmatic and much more user-friendly approach. And I want to insist once again that certainly the middle class could be taxed a bit more. It's not comfortable because I belong to that sector of the society, but they could be shaved. But certainly the upper middle class and the upper echelons, proportional to their income, do not get taxed nearly enough. And this requires much greater tax activism on the part of the state. I think the question as well of wastage, the stolen monies, the wasted monies, the missing monies has also been well made.
Matthew, what do you make today of the different solutions to avoid the crisis? One of them being that, well, structural reforms, let's just really set them aside. They won't even begin to touch base. Let's go for the big guns. Let's get money from the Reserve Bank. Let's get money from the PIC, which I suppose would mean getting money from the pension funds.
Look, I mean, our number one crisis is that we have a 40% unemployment rate. If you can get people employed, they can take care of themselves, they can take care of their family, they're less dependent upon the state, they can have a better life, they can spend in the economy. We have to address that. And I think for us there's about 6 fundamental ways to do that. One is for the state to get its house in order. We can't have a state pleading poverty and squeezing workers for every little cent, yet government is willing to throw 150 billion rand down the drain in corruption every year and wasteful expenditure. We have to address that. We have to help build the state-owned enterprises, get them back onto their feet so they don't require constant bailouts, because the bailouts that they've received of billions of rands are not sustainable. You need the SOEs to contribute to growth, not to be a burden to the state, not to threaten workers' jobs. We have to rebuild SARS and invest much more in SARS to tackle the huge amounts of money we lose to tax evasion every year, to implement lifestyle audits. You'll be amazed that only 5% of goods coming through our ports of entry are respected for customs duties. So we're losing billions of rands on that front. We have to look at where do we invest money, where do we mobilize money to stimulate the economy. The banks have to come to the party. They need to avail credit for productive investments and less for flashy, credit cards, etc. We think it is positive that government has released an amendment proposal to Regulation 28, which will allow pension funds to invest in infrastructure. Those are the things we need to see. And when we do agree with Duma, often you see the PIC, which is workers' money, has been used to enrich a politically connected elite. It needs to invest in ways which benefit workers, the pension fund holders, etc., but also needs to invest in the economy to create jobs, to create economic growth. So people are less dependent upon a grandmother who's got a pension or a father who's got a public service job, and we create more employment for people. Yes, we can go to the Reserve Bank, and I agree with Lebogang and Duma. Reserve Bank must play a much more proactive role. It must assist government. It has done some positive work for once in the past year. It needs to do much more of that work. If you can do all of those things, it can help, but also government has to remove some of the structural blockages to the economy. We've been talking about digital spectrum for years and years. We've been talking about water licensing for years and years. Government has failed to move on those things, so they need to address that. And these are all complex issues. But simply doing what the Treasury wants to do, of dumping the bill for all these problems upon nurses, is not going to resolve the issue. In fact, it's delaying the matter and it's going to make it worse long term.
A second break. We'll come back and tease this matter a little bit more. How is it that a country like Japan is able to sustain a debt level above 200% to GDP for more than a decade, while you see Argentina and Ecuador with half of that debt already defaulting? That is, of course, the conversation on the debt situation or the debt challenge. Lebohang Pheko, Duma Qubule and Matthew Parks with us tonight. Do stay on. We'll get to your tweets and your comments in a moment. We're back on the news feed late now. Thanks for staying on. Lebohang Pheko, Duma Qubule and Matthew Parks still with us tonight in this conversation on how do we challenge or how do we deal with the debt challenge that we are facing in the country. So, Duma, you mentioned that, I mean, we are not even beginning to hit the ceiling when you're looking at other countries. So I mentioned before the break that Japan, for example, sitting at about over 200% of debt to GDP for decades now, and they don't seem to be defaulting. So how is it that they're able to do that while Argentina and Ecuador, with probably half or even a third of that debt, have already defaulted?
Okay, I should mention something about Japan. Half of the Japanese debt is owned by the Bank of Japan. So the Bank of Japan has been financing government spending over the past 2-3 decades. And then the second thing is that the Bank of Japan has been influencing the interest rates on that debt, driving them down. So our Reserve Bank can be doing much more to be able, and the PIC I must mention, in terms of purchasing government debt to reduce the cost of capital that you're talking about. Because central banks throughout the world, they have basically bossed the bond markets, they've nationalized bond markets in most countries in the world and many advanced countries in the world, and brought down the cost of capital. So the Reserve Bank can do a lot more together with the PIC in terms of buying debt on the secondary market. Now, in terms of countries like Zambia and Argentina, the problem there, Thabo, is that you should not have debt. The original sin is to have debt denominated in foreign currency. I was looking at the Zambian situation. It's more than 2/3 of its debt is denominated in foreign currency. And that is why many of us were opposed to the loans from the IMF and the New Development Bank. I did an analysis of every emerging market crisis since the early 80s was due to an accumulation of foreign exchange debt and foreign currency denominated debt. So we've got a unique privilege in South African economy of debt. 90%, if you read the budgeted review, over the next 3 years of our debt is denominated in our local currency. And we can reduce that figure we can increase reduce the foreign denominated debt. So what I'm trying to say is that, so South Africa, we are not in the same situation as Argentina, as Zambia, as Ecuador, which accumulated these foreign currency debts. And our Reserve Bank, and on the state-owned enterprises, the Reserve Bank can be involved in recapitalizing these state-owned companies. The major problem right now is the Eskom balance sheet. The government has been kicking this can down the road for 3 years. There are so many proposals that have been made to reduce the debt on the Eskom balance sheet. And let me just talk about this thing of the bailout. And what the government strategy is doing is withdrawing the state from the capital accumulation process in terms of the network industries. That's your energy, transport, rail, and so forth. And they're giving that wholesale to the private sector. I don't see how a trade union like COSATU can be supporting a wholesale withdrawal of the state in energy, in transport, in telecommunications, in rail, and whatever. It's going to be what you call a private sector free for all, where prices go up. So we have to, and so we shouldn't be talking about bailouts of Eskom, because the government has to contribute towards the investment that we need in Eskom over the past decade. So this is not.
Are we ready though for a conversation of which SOE, state-owned enterprise, must be allowed to fail? Right? I think there's a consensus around, for example, Eskom, that Eskom is too big to be allowed to fail. But are there some that we should allow to fail and be allowed maybe to be picked up by the private sector?
I did an analysis of SAA. It's costing more to shut SAA down than it would have cost to keep SAA running. even throughout the pandemic. Mr. Jachana, many years ago, he said it would cost I think he asked for 21 billion rands to fix this airline. We have spent way in excess of 21 billion rands shutting the airline down and investing in a new airline. So the problem at SA, quite frankly, SAA truly doesn't have macroeconomic impact in the same way that Eskom and Eskom and Transnet have. So if I was in charge, I would have kept SAA open throughout this period, because the problems of SAA were that there was the revenue minus expenditure was about 2.5 billion rands a year. And for the life of me, I don't understand how you couldn't close that revenue gap. So I'm just saying that SAA for me is not I think we could have kept it open. That's what I would have done.
Aslobhang, is it critical for us where we borrow money or who we owe?
Always. I actually think it is. I mean, if we're going to look at the old model of going to particularly the IMF, the World Bank, and so on, and notwithstanding that some of those debts are graduated, and notwithstanding that even though we've been told that they're going to be much kinder than the sorts of structurally adjusted loans which have led to intergenerational state debt, states which are indebted for 30, 40, 50, 60 years, basically. I'm not entirely buying that, but I do certainly think that we have the opportunity right now to rethink the notion of even how our economies are structured, to minimize the need even for looking for debt externally. I'm also wondering about the notion of whether or not we could actually be rethinking, in fact, whether our economies need to be entirely driven by, the dollarized international markets, because not only does that mean that we need to be really thinking about the ways in which we can think about multiple forms of measuring international economies. So this sort of default of the dollar US is relatively new. It wasn't always that way, and it's actually caused wars, and this is one of the reasons, not to become too controversial, but certainly some of the skirmishes in the Middle East are to do with the whole notion of trying to have a multiple basket of currencies to draw from, rather than just the sovereignty of the US dollar. And I would see that currency sovereignty is one way out of this, because we have to consider that when their exchange rates, these work very poorly in our favor or against us, depending on the dollar to rand strength. I'm also wondering as well around whether or not we're able to borrow from other sectors of the economy. So, for example, what some countries have done is if they are agricultural surpluses, they're able to then put that into a food bank, into a money bank of some sort, and that is then used to then pour into the economy, lend to the state, rather than always thinking about external debt and securing debt. Not all debt is bad, but I think in the South African country context, and in most African country contexts, we have not been able to leverage debt in a way that is useful to us per se.
Matthew Parks, let's talk then about, firstly, what Duma is raising, government pulling out of the transport sector, the energy sector, the telecom sector, and allowing private sector to literally run free there. But let's also talk about what the Auditor General is raising. I think 20 out of the 257 municipalities there putting forward clean audits. Is that part of what is leaking in our system here that is contributing to this debt?
Sure. Look, I mean, we've never said as COSATU the government should withdraw from energy or from Transnet, from Eskom, etc. The COSATU has never said that. We've always said that there's a certain strategic sector of the economy, precisely like electricity, like the trains, etc., that government needs to be involved in. They need to fix them. And the economy depends upon Eskom. Eskom produces 95% of our electricity and so forth. So we have to fix it because that is suffocating the economy. We do need to have more energy generation. And so we've said, look, you do have the IPPs, but they need to be not subsidized by Eskom. IPPs, if they want to exist, they have to exist on their own 2 feet, and you can't afford to have Eskom subsidizing them. We need to fix Transnet because that is delaying getting our goods from our farms, from our factories to the markets, whether it's local or foreign markets. We need to fix our ports because you've got endless queues getting our exports from agriculture, from motor manufacturing, out to the product. So those are the kind of structural things we do need to fix because that'll help to grow the economy. It'll help to save jobs. If you can fix PRASA, workers can get to work on time. they won't lose wages, the companies can be productive, and so forth. So those are the kind of things we need to fix. And I would agree with Lebogang. It is a strategic mistake to have too much of our debt in dollar. We've seen with Eskom, for example, when they got the World Bank loan, as the rand depreciated, the debt increased. So we do need to look at financing our own loans, etc. But again, there's no point of getting more loans and increasing your debt on this point, for example, if you're not addressing the mismanagement, the corruption, the wasteful expenditure that is bleeding the state. At Eskom, which is a prime example of looting, you had a manager which would spend 24 rand on a bottle of water, which would spend 18 rand on a black plastic bag. You had managers at power stations which would deliberately allow those power stations to be neglected, to not be maintained, and to collapse, simply because their brothers or their sisters or their friends or themselves had contracts in maintenance. So you have to address those things. Then we won't need to go around borrowing so much. So it is complex issues, but we have to address the right cause of these problems and not to outsource the problems to other issues. I think also just to raise the issue of what people have often said, which Treasury I think has misled the public to an extent around. The public service wage bill has actually been stable at 35% of the budget since 2009. It's never gone above 35%. It's not the cause of the problem. The cause of the problem, again, is mismanagement, is state capture, is corruption, is neglecting investing in infrastructure and the economy. So let's address those issues if we want to find the real solutions.
Where do we place our tipping point as far as our levels of borrowing are concerned? Right, Matthew?
Our tipping point is having 40% unemployment. It's having the deepest economic recession in 100 years. We are at a tipping point. We've had millions of workers in the last 2 years losing their jobs. We've got families going home not able to buy food, to buy transport for the kids to go to school, to buy electricity, to buy the goods our factories produce. We are at the tipping point. But the solution is to save those jobs, to provide economic and social relief now to those workers, keeping those companies afloat. It's about stimulating the economy now. That's what needs to be done. Debt, sure, that's a problem for lenders, but our fundamental problem is a stagnant economy, is a massive and a dangerously high unemployment level. Those are the tipping points you need to address. If you address those, the issues of the debt, of the deficit, etc., will be fixed on their own. And again, it's about the corruption, the state capture, etc. You can't fix a broken state if you don't address the fundamental problems.
Duma, are we going the wrong way about fixing our public debt finance situation?
No, we have. So what I'm saying is that the way towards fiscal sustainability is to spend more into the economy and grow the economy. And then the second thing I want to say is that, Brazil had a higher debt to GDP ratio than South Africa going into this crisis, but they implemented a massive stimulus into the economy through something called the Corona voucher, where they paid, I think, 1,800 rand to every Brazilian, to 66 million Brazilian. And that was a success in terms of what Brazil did. And their debt to GDP ratio is going to 100%. Now, to answer your question, there is no tipping point to where a debt ratio becomes unsustainable. What we have to do is to address the issues that Matthew is talking about. If you spend the money properly, and the money is, let's say you spend it on infrastructure. The IMF says that if you spend one rand on infrastructure and it's spent properly, the government gets 2.7 rands back. So this is something as close to a free lunch as we can see in the economy. So yes, we have to address the institutional state impediments towards spending money. The money must be spent efficiently to grow the economy. And we can grow out of this debt problem. This is what I'm saying.
We can grow out of this debt. On that note, let's take a break. We'll come back with Duma Qubule, Lebogang Pheko, as well as Matthew Parks as we wrap up the conversation with your tweets as well at Newsroom 405. WhatsApp us your questions and your comments on 072-110-5584. Back with us on the Newsfeed Late Night. Thanks for staying on, and I see your engagement coming through tonight on WhatsApp. Still with us, Lebogang Pheko, Duma Qubule, and Matthew Parks, and we are talking the debt challenges in South Africa and how we deal, or better deal, with our public finances. Let's have a look at what you're saying. Silo sending us a WhatsApp message tonight. He says, even though we borrow money, still that money will go to our corrupt leaders that we voted for. Silo Imirafong. Thank you very much for that message. Dr. Tigere Muringa saying, taxing the consumer will expose the poor. Giving more loans will affect the consumer indirectly. Taxing the rich, the consumer will pay the tax indirectly. We need tough decisions here. Aslebu, just deal with that. Either way, it seems, Dr. Tigere, they're saying we can't win. Even if we're saying we will tax the rich, they'll find a way to bring it into the system, and the poor will still pay for it.
Yeah, the poor probably will, because we have a state and a government which are not willing to be redistributive in their approach to economic, to economic financial management in this country. So instead of rather going for a developmental state, which is what we purport to be, we've actually followed a quite, right-leaning, outward-looking, GDP targeting, inflation targeting approach, with all of the fundamentals of not quite a structural adjusted country, but certainly a right-leaning, very conservative, market conservative one, which doesn't enable money to flow into developmental projects easily. It doesn't enable money to flow into crises such as this easily. We've already talked about the role of the Reserve Bank, which could be much more elastic and much more nimble. We've already also spoken about the sorts of money that is already available to the state, which is already available in different state institutions. And we keep hearing about the potential then of building new institutions which the state can then draw on in order to then, grow the economy. I'm not sure why, when we've actually instead managed to mismanage quite spectacularly the existing infrastructure. And I think that just to add to that is then, of course, then what do we mean? What is it that we're trying to grow? And I want to insist once more that if we're going to keep on talking about growing the economy whilst using the same fundamentals that have failed for the last 27 years, I'm not sure how this is going to work. We have to think about revenue mobilization in much different ways. And the years of, there've been years of hardship for households, for small businesses in this country. We need to be freeing up money to then go into small business development and capital expenditure. We have to go. How do we say that we're developing SMMEs when the state cannot even pay an invoice after 30 days, 60 days, 90 days, 120 days? As a small business owner myself, I myself have lost many, untold amounts of revenue in this regard. So certainly, what the policy principles have to be aligned with the kind of state and economy that this government wants to build, and one that is also linked with legacy moving forward. What is the next 50, 60 years going to look like? And I don't think that there's a vision for that, which is why we keep hopping from one policy instrument to the next, in a very cavalier, completely incoherent manner.
You spoke earlier on of a dollar-denominated borrowing, as well as, of course, looking at what the outside borrowing financial institutions would then put in place as conditions. But let's talk then about the rating agencies, which have not been favorable really to South Africa. At what point are we going to get to a point where nobody wants to lend us money? Or is it a case of, as long as we can pay the higher interest rate, there'll always be somebody who will lend us money?
There possibly will always be somebody who will lend us money. I mean, I think that there are countries that have been functioning even on junk status. It just means that, of course, your rate of borrowing is a bit higher, the rate of risk, the risk is a bit higher, and there are always risks attached to borrowing at a much higher rate. I think that, though, my concerns with the ratings agencies are much deeper than that and are quite well documented, which is basically that it's a pity that at a time such as this, instead of looking inwardly and having the opportunity to be much more activist and to be much more creative and much more nimble, we continue to obsess over, frankly, quite undemocratic, very opaque institutions, which really have no real, shouldn't have so much influence over the ways in which economies across the world function. And I think that right now is not the time to be stressing so much about ratings agencies. I think that the influence of the ratings agencies seems to have increased over the last 10 or 15 years. Even before the so-called lost years, there was an increase, an increase in their influence. And I think that if we're going to talk about building back better, building back radical, I would prefer to say. We need to really de-link from the old ways of doing things. So the one is the kind of getting away from the dollarization of our economies. The second is this obsession with GDP growth as the only way of growing the economy. The third would be really rethinking the ways in which the Reserve Bank can stop inflation targeting as the primary, basically their reason for being is to just fight inflation rather than to be redistributional in their approach and so forth. So, I'm not the right person to ask per se about what ratings agencies are not going to say about us. I have a very poor brief for them in general.
All right, Kakambile in Waterkloof sending us a WhatsApp as well saying we are not in a debt crisis. ANC cadres are ensuring that they steal first before servicing any activity, be it education, health, etc. Now, what we have seen, Braduma, is government reprioritizing about 130 billion rands, and I know you've got a lot of views around that and whether it was effective indeed during this pandemic. And they have, of course, given us some kind of tax break via the Reserve Bank, and that put in about 70 billion or so, and this forms part of this stimulus package, including that 200 billion that was meant to be the loan guarantee scheme, which of course the government still has difficulty distributing. But there's something else that is being talked about. It's called zero budgeting. I don't know if that at all assists with the point that Kakambile is raising of people stealing money before they spend on education, on health and things like that.
Okay, first of all, the government was talking about this 500 billion rand stimulus, and I've been talking a lot that this stimulus was not 500 billion rand. According to my calculations, it was 120.1 billion rands. According to another think tank, the Institute for Economic Justice, it was 158 billion rand. So every single estimate of the stimulus done by people independently comes to a figure of about a quarter of the stimulus here. Now, in terms of zero-based budgeting, I just think that this is dog whistles towards the IMF and the rating agencies. It's like inconsequential because the pilot, I understand, is just at the Department of Public Enterprises, which is not really a spending government department. So I just think it's something that they've done to please the rating agencies, but it will have no impact on government spending across the board. And I think, as a colleague, an economist of mine says, it's just an extreme form of austerity. But thankfully, it hasn't really been implemented, and there are no plans to implement it in a serious way in the government. The last thing I want to talk about, Thabo, is that we've got a deep financial sector. We have to mobilize domestic resources. The ratings agencies don't have really leverage over us because only 10% of our debt is denominated in foreign currency.
Talk to me about that. Why? I mean, economists, fine, they differ on this one, but the general opinion is that if we held our debt in local currency, the risk of defaulting is minimized. Why? Yes,
because you see that if the debt is in foreign currency, you can exchange rate risk, as Matthew was talking with the ESCOM loan, and there's so many problems that you can do. So now, most of our debt is owed to domestic institutions, your pension funds, your banks, and so forth, and your government as well. Government is a big, the PIC is a big owner of government debt. I think it's about 10%, hang on, I can't remember the number. It's about 500 billion rands of government debt. So if we can mobilize more domestic finance, that will reduce our links. What Ndebohang is talking about, delinking from foreign capital while we grow our economy in the next few years. Yeah. So, and the last thing I have to say is that we have a very deep financial sector. I do not agree that Section 28 is a cop-out for the government. It's a voluntary mechanism. So we have got 16 billion rands of assets in your pension funds and your banks over the past December 2019. I believe we should be talking about prescribed assets, and we should be talking about a minimum target for developmental investments, and we can release impact investments of in excess of 700 billion rands or 1 trillion rand. There has to be quotas for bank lending. Let me give you the last example. What pains me Total bank lending to black SMMEs is 0.5% of their total assets. It is about 28 billion rands that they've lent. And I do talk to some of these banks of what they're doing to lend to black SMEs. It is pitiful on an annual basis. So I do think that we need to have, like Asian countries we need to have quotas for certain types of lending for the banks and the insurance companies.
Matthew Parks, the public sector wage bills, government suggesting a freeze for the next 4 years. Do you see that actually working out at all, or is COSATU really going to dig its legs down there and not moving on it at all?
Yeah, look, it's not helping the matters at all. In fact, it's going to provoke labor market instability. And part of growing the economy, delivering public services that are needed, is to have a productive and motivated workforce. By telling public servants who have carried this nation to a large extent over this past year, the nurses, the doctors, the police officers, the prison wardens, the municipal cleaners, etc., that government's thank you to them is to say, here's a 4-year wage freeze, which in effect, after inflation, will probably come out to about 15% wage cut in real terms. That's a huge slap in the face. You depend upon a state to motivate public servants. You depend upon motivating nurses and doctors to remain in the state. If you're going to throw them under the bus, they're going to leave. You're going to see an increasing level of teachers going to the private sector, etc. So it's not addressing the issues. If government had the moral courage, they would have announced a 25% cut in what ministers earn. It's hypocrisy of the highest form for a minister of finance to say the wage bill is too high, and an average nurse earns about 186,000 rand a year. The minister of finance lives largely free of the state and earns a salary of 2.4 million rand a year. So government needs to do that. They need to implement a single wage regime for the entire state, because you have in the state-owned enterprises a Wild West. You have 800 managers in Eskom earning above 2 million rand. You have managers in the SABC earning more than what the president says. Yet the very same SABC is retrenching over 300 workers, and they've already retrenched several hundred in the last few years. So for us, government needs to respect the 2020 wage agreement. They need to go and engage the unions of the Public Service Bargaining Council on the next 3-year agreement. And there are ways we can help the state to save money by cutting the fat on top, by protecting the lower middle income earners, etc. But again, public servants want to know, is government ever going to become serious about tackling corruption, tackling wasteful expenditure, holding failed managers to account, fixing the SOEs, fixing SARS, stimulating the economy? Because those are the things that have to be done to stabilize the fiscus. Throwing workers under the bus is not going to provide solutions, and in fact is going to send a wrong message to workers that they're not appreciated and the government does not care about their legitimate rights to be protected from inflation and so forth.
Right, Matthew, we're going to have to leave it there because of time. Appreciate you. Thank you very much for coming through. That was Senior Research Fellow and Political Economist at Trade Collective, Lebohang Peku, Founding Director of the Center for Economic Development and Transformation, Duma Gqubule, as well as COSATU Parliamentary Coordinator Matthew Parks. They're helping us with that conversation. Appreciate all of you. Thank you very much for joining us tonight.